Hello, everyone. Good morning to you from this part of the world, and depending on what time zone you're tuning in from, I want to wish you a good afternoon. I'm so excited to welcome you to our first edition of the Forex Morning Mastery for this week, and in fact, this week is likely going to be intriguing as we look forward to the inauguration of Donald Trump in about 4 to 5 hours from now, if I'm correct on that one. And of course, major key players in the market will definitely be looking forward to hear Trump's inaugural speech and probably subsequent policy announcements, which could definitely lead to volatility in the market through the course of the week. And this week we are going to be deliberating on three financial instruments as always, which of course revolves around the US dollar, which makes it very, very important that we keep tabs with what Donald Trump is going to be saying. For this week, we are going to be running the USOILSPOT, and in fact, I had to drop the GBPUSD out of my watch list for this week, and you all know why that is. Last week, we didn't do very well at all, and of course, the previous week, we had just a little bit of profit. And for me, I'm beginning to think that the market is going through a consolidation phase, showing us signs that the indecision in that market is on the high. So I want to stay out of that market, allow the market to evolve, mature into new trading setup, most importantly on the higher time frame before I come back into the market. So instead, I will be taking on the USDJPY for the week. And it has to do with a couple of reasons. We have some fundamental factors and technical evolution on the chart right now, which makes it a promising setup to trade for the week. And besides the technical implication on the USDJPY, we also have key events to look out for, like the Bank of Japan interest rate decision, which is coming up later in the week. That will definitely going to be giving us some insight into how to capitalize on that one. So we do definitely have to stay alert for the Bank of Japan announcement. And if there is a rate hike, this could strengthen the Japanese yen, and if not, it might lead to a sell-off. And I just had a good fit in terms of technical setup to help us navigate that market today. So if you are a USDJPY fan, you don't want to miss out on these ideas that we will be deliberating on today. Then finally, we are going to be looking at my favorite, that is the XAUUSD, popularly known as the gold spot. And of course, despite the strength in the US dollar in the last couple of weeks, we have seen how the gold commodity had continued to rise ahead of the inaugural speech from Donald Trump today. So we are going to be looking at this market today, taking all of these fundamental factors into play to make an informed trading decision. So I encourage us all to stay tuned in, as you do not want to miss out on these valuable ideas. And for those of you who are joining us for the first time, you're highly welcome on board. Very glad to have you around with us this morning. The Forex Morning Mastery is an educational platform where we all come together as a community 3 times in a week to monitor a particular set of assets throughout the course of the week. And it's important to also note that this is not a signal service platform, but an educational avenue where we come together to understand, have a deep understanding into what major key players in the market are doing, using fundamental and technical analysis to come to a decision. So you're highly welcome on board, and I do encourage you to actively engage in the comment section. I see you, Wokocha Kingdom. Good morning to you. Glad to have you around with us this morning. So with that being said, here we will be diving right into the business. And as always, the first thing we normally do, of course, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today and for the most part of the week. And based on the new development we are going to be focusing on impactful event from both the United States and the Japanese economic docket. You see, from the United States economic docket, we have a couple of events to look forward to this week. One of which is the presidential inauguration. We're definitely going to be listening to what Donald Trump is going to say as regards to a lot of things, sincerely, from the sanction on Russia. We're also going to be keeping high on statements from it's the potential possibilities for its administration regarding the continuation or modification of current sanctions on Russia, Iran, and Venezuela. And also, we're going to be looking forward to any form of indication of tightening or relaxing this sanction. And of course, this will definitely be giving some fresh impetus into the market. So whatever it says today is going to be playing a significant role, and there is a high tendency that major key players may want to step aside of the market, waiting for this speech to come in before making any informed decisions. Then on another high impactful event to look out for this week is coming in on Friday, which is the S&P Global publication, where we are going to be looking at how well the manufacturing and services sector of the United States is doing. So those are the major events from the United States this week, and except for Thursday, where we will be looking at a labor-oriented data in the form of the initial jobless claim count. Now, besides this, there are some impactful events from the Japanese economic docket, one of which for this week is coming in on Friday, and that is the interest rate decisions, where members of the Bank of Japan committee will come together to decide whether they will be increasing interest rate or not. And of course, this is going to be coming on the back of increased inflation in the Japanese economy, and there is this growing sentiment around the possibility that the Bank of Japan will be increasing interest rate, which may give the Japanese yen a traction against the US dollar. So we are going to be taking all of this into account while we review the current market structure. Then what else do we have again for this week? Okay, on Wednesday, we have the export and import trade balance from the Japanese economic docket, which everyone will be looking forward to see how well the economy performed in December as regards to transactional export and import transactions. So these are the events we are going to be looking forward to this week. Now, the anticipation of this event definitely has its own way of influencing how market participants will behave. So as a result of this understanding, we want to be going right into the charts to look out for structural details that can give us clues and insights into what the potential decision this majority of market participants will be making in this market environment. So the first asset we are going to be taking on this morning is going to be the USOILSPOT. And in fact, I didn't do very well on the USOILSPOT last week. In fact, I still held a position over the weekend, which is still currently running in a loss, a significant one, in fact. And the idea that the sanctions on Russia could escalate price was one of the key factors that drove the decision to buy the US crude oil last week. And of course, remember, we saw at the beginning of last week where the opening candle was so massive bullish, which reflects the immediate reaction of market participants to that US sanction on Russia. Now, as it is right now, the market had continued to find lower lows and lower highs, which from a technical standpoint, I'm beginning to consider that this might likely be a retracement of that impulsive move we talked about at the beginning of last week. Now, if we are going to be dissecting this chart going into the new week, we need to really understand the dynamics of this market. What are the drivers? What are the major drivers that are influencing how market participants are behaving this week? And after taking a look at these drivers, I'm beginning to notice that the path of least resistance for US crude oil may be to the downside. And why have I said this? Well, if we look at the policy uncertainty, that is the cautious approach by oil traders ahead of Donald Trump's inauguration due to unclear outcome of his proposed policies like tariffs, tax cuts, and immigration, it could lead to market volatility. So a lot of people are very, very cautious at this point in time, in as much as the path of least resistance is looking bullish, but the cautious atmosphere here is sending oil prices to the downside. Then another factor that we cannot ignore is the easing tension in the Middle East. There is, I talked about this last week, there is a ceasefire between Hamas and Israel, and this could reduce geopolitical risk premium on oil, potentially capping the further price increase. And in fact, yesterday we learned that Hamas released about up to 20 hostages to Israel, which is a very, very good news, and it could further ease tension. And if the concerns of oil disruption from this region reduces, then what happens? Then the fear, the chances that oil will drop begins to increase. So for me, these are things that I'm considering at this point that could push price to the downside. And today, the US market is going to be closed for the Martin Luther King Jr. Day, and there might be lower liquidity due to this, and this could also lead to less aggressive trading or price movement. So if we take all of this into account, it appears that price may likely drop today. However, in as much as this possibility is high, the sanction on Russia is still there, and we have vessels, loaded vessels, trapped in this Russian port, which cannot be moved out, and this could further reduce supply in the global market. And if this, it can lead to an increase in oil prices due to that potential disruption as well. However, traders are also speculating on whether the Trump administration will maintain or expand sanctions on Russia, Iran, and Venezuela, which could potentially tighten global oil supply. So all of these factors, we are at a very crucial juncture at this point. And to make a decision, we really need to look out for confirmations around the structural details we will be identifying today. And while we are going to be talking about the technical structures to look out, we are also going to be monitoring, keeping a close eye on statement from Donald Trump's today's inaugural speech today. We need to be keeping a close eye on it to hear what he will say, especially around sanctions on Russia, Iran, and Venezuela. Any indication of tightening could relax this and could move price significantly. And then we also want to be preparing for volatility, where the policy uncertainty, prepare for potential volatility, especially around significant events today. So we are going to be taking all of this into account as well. And in light of the holiday and potential low volume, our analysis will tend to look out for support and resistance level, especially if the news flow is uncertain. So we are going to be looking out for significant breakout retest of structure around what we are looking at to decide if we are going to be buying or selling. Now let's quickly run through the technical details here, and let's go into the 4 hours time frame. where we want to be having an holistic perspective into what has been going on in this market. Now, what I did here on the 4 hours time frame was to take into account the character of price action in the last 6 to 7 weeks. That's since the mid-month of December. And as you will see here, the market is obviously bullish. And if you take it a step further to connect the pivot lows, you can see we have this first ascending trend line here after connecting the series of higher lows, and then we saw another one here giving us something like the resistant line of an ascending channel, though this is not a confirmed ascending channel yet. So we have the structure broken last week. Is it last week or 2 weeks ago? Yes, this structure was broken, and ever since this structure was broken, you can see how it had become a demand zone, an ascending demand zone. Every time price comes here, we see buyers push price to the upside, and through the later part of last week stroke the beginning of the week, you can see price action is trading around that trend line. Now, in addition to these trend lines here, after confirming that the trend is bullish, we need to also look out for a key level that we are going to be using to navigate this market today. And this is where this $77 area comes in, a level which has served as both resistance and support line. In fact, it has played a significant role in determining the direction of price action since last week's trading session. And for the fact that price action is back around this area, it further confirms that we are at a crucial juncture where, depending on what happens around this area, will determine if we are going bullish or bearish. Now, if we see any form of buy pressure around this area, which interestingly lines up with that trend line there, it's called welcome buying ideas, maybe back into the $79.35 level, dovetailing to a minimum of 200 pips to catch there if price ever goes that far. But if we see a situation where price breaks down both the trend line and this key level at the $77 area, then we may be looking at a potential retracement back into this ascending trend line we spotted earlier, and this could be dovetailing to about how many pips is that? That's about 230 pips thereabout if price moves significantly well. So you can see how crucial this area is, and in fact, since the beginning of the week, there's been a little bit of choppy market condition around this area. So for us to have a clearer perspective into the behavioral patterns of market participants around the $77 key level, we will scale down into our execution time frame. Now, scaling down into the 1 hour time frame, that is our execution time frame, this was what I was able to come up with this morning. First of all, since Friday's trading session, you can see how price had been finding lower highs. So I have a descending trend line to play with today. Now, in as much as price is finding lower highs, one interesting thing you will notice around the structure is the fact that sellers are yet to find a lower low, which makes it a little bit dicey to just join a bearish move at this point. Now, why do I say so? Okay, look at this here. We saw that despite the lower highs, price was unable to break down the $77 area at multiple times. We saw this happen on Friday, and since the new week began, look at what has been happening here too. The inability of sellers to break through may bring some level of hope for buyers to hold their positions. Now, if this continues to be a support line, chances for buy opportunity could come in if price breaks back above the trend line and then continue to the upside. Now, for the last 10-11 hours now, you can see price had been on a bearish note. The week started on a strong bearish note. We had a resistant line established here. at the $77.73 level. So that is our resistance line for the week, around the $77.73. And then we have our support line just close to that key level at the $77 area. So we do have a range bound structure to work with ahead of today's trading session. So how are we going to be navigating this market around this area? Well, it's quite simple. You know how we use our range bound structure. We want to exercise patience for market participants to finalize their negotiation. And if sellers win, then we will be seeing something like a breakdown retest of the structure to continue the decline. However, if buyers become stronger, a breakout of the resistance line will be a good confirmation for us to join the uptrend move. And in fact, by the time price breaks out of the resistance line of that range bound structure, price would have been above that ascending trend line we spotted on the 4 hours time frame, making it a good area for us to join a buy. So let's see how the market will play around the structure. In fact, I'm also going to be considering buying even early if I was able to see something like a breakout retest of this trend line. If I can see that, it will be a very good confirmation that buyers are getting stronger, and then we could look out for more opportunities at the break retest of the resistance line at the $77.73 level. So that is what I'm going to be looking at today around the US oil spot market. But from the fundamental factors we talked about earlier, the path still looks very bearish at this point in time. And let's continue to monitor price action. Let's keep abreast of any early indications from the Trump administration on energy policy, particularly regarding sanctions and trade, as this could dictate the near-term direction of oil prices. So Donald Trump's speech is going to be playing a significant role today. So let's look forward to see how that is going to play out. But trust me, I will be with you in the comment section of my TradingView or my Telegram platform to give us update on this particular one. So this is the setup we are looking to guide our trading decision today. I encourage us all to mark it out on our chart, as we are going to be using it as a reference point. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned. All right. So in the absence of no questions, I want to assume that we are all on the same page. We are indeed at a critical juncture here. The last 3-4 hours have just shown us that sellers are struggling around this area. So could it be a platform that could send price higher? Well, let's exercise patience and see how it's going to react to the zone. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, and like I did say earlier, I have dropped the GBPUSD for the USDJPY due to a couple of reasons. We haven't been doing very well on the GBPUSD in the last couple of weeks. Last week was even not too good compared to the previous week. And if we take an holistic look at the GBPUSD chart and of course the fundamental factors, it appears that the indecision in that market is still very strong at this point in time. And despite the fact that the US dollar is enjoying some momentum, we throughout last week we didn't really see that traction reflect against the pound sterling, which for me is a very big concern. So I just decided to stay put, stay out of that market and wait for new structural details to evolve on the higher time frame at least before I want to come back into that market. And while I was looking at the USDJPY this weekend, I began to notice some interesting trading setup which I'm excited to share with you this morning. And also I took into account the factors, the economic development in the Japanese economic docket. We have very improving domestic economic conditions in Japan, and of course major key players buying the Japanese yen will be making the Japanese yen very attractive at this point in time. And if I can see some dips around the JPY, it could be a very accurate time to buy the Japanese yen. So when we are saying buying Japanese yen, that means we are selling the USDJPY. Especially if the USDJPY approaches significant resistance level, which we are going to be talking about in a moment. Then I also looked at the idea that the Bank of Japan is going to be deciding whether they will be increasing or maintaining their current interest rate, and this is coming up on the back of an economy which is characterized with high inflation at this point in time. And if the Bank of Japan signals further rate hike, or if inflation wage data continue to surprise on the upside, this could be moment to buy the Japanese yen. And if these expectations are not met, it might be an opportunity to sell or short the JPY too. So it's going to be quite an interesting environment around this market this week. Now, what are the major drivers that could influence the Japanese yen this week? Well, we have a positive risk tone market where a general positive risk environment might reduce the demand for safe haven currencies like the Japanese yen. However, the core machinery orders for the Japan economy increased last month by 3.4%. Is it for December or November? I think November 2024, and this signals a recovery in capital expenditure, potentially strengthening the Japanese yen. Then if we also look at the expectation of an interest rate hike by the Japanese yen later in the week due to broadening inflation and strong wage growth in Japan, the path could be to the upside for the yen as well. And last week, after when I was looking at the news, there was statement from the Bank of Japan officials, including the deputy governor of Bank of Japan and even the governor himself, suggesting discussions for an interest rate increase. So everything is looking towards a potential interest rate coming in on Friday. So I believe that if things goes as expected, theoretically, the path of least resistance for the Japanese yen will remain to the upside. However, in as much as this is in play, you know how the market works. There are other counter forces that could limit this potential that the Japanese yen have. Now, we have uncertainties around Trump's policies, where especially the trade policies, which could also cap the Japanese yen appreciation. And then we also have the upcoming events, that is the inaugural address coming up later today, and the Bank of Japan policy meeting, potentially limiting any aggressive Japanese yen movement at this point in time. And of course, don't forget that the US dollar has been doing very well in the last couple of weeks, thanks to the rebound in the US Treasury bond yield and positive housing data, which has also supported the US dollar in the meantime. So, in as much as I strongly believe that the yen will rise this week, we will not ignore the potentials of the US dollar as well. Now, to help us navigate this market, I started my analysis from the 4 hours time frame, where I captured the character of price action since the beginning of this year. And if you look at this correctly, you will see there is an interesting setup gradually unfolding on the chart. In fact, since December last year, the momentum has been looking very bullish at this point. And if we take it a step further to connect the series of higher lows, we have a very strong ascending trend line here. Look at since December last year, we saw how price action has been respecting the trend line, and in the last 2 to 3 days now, sellers have been finding it difficult to break through that area. Now, will this trend line become a supporting factor for buyers, pushing price further to maybe the resistant line at the 159.00 area, dovetailing to about 280 to 300 pips, if that is going to be the case? And if we consider the possibilities that the yen could rise this week, a breakdown of this trend line will be all we need to join that decline. And in fact, I have a structure here to help us navigate that bearish expectation, and that is where this descending trend line comes into play. And if if buyers find it difficult to break out of this descending trend line, and we continue to see certain pressure around this trend line, it will be a sign that everything is going in favor of the Japanese yen. And besides this trend line we have here, we are going to be looking for an equilibrium in the form of a key level to help us navigate this market this week. And this is where the 156.00 psychological level comes into play. And if we go to as far back as December of last year, you will see how this level had at one point in time served as a support line, that is a demand zone. Ever since price broke out of this structure here on the 19th of December, we saw how sellers have struggled to break through that structure. And every attempt by sellers to break through has always been met with strong resistance from the buyers. And not until last week, we saw an attempt which looked like a successful one. Price broke down the structure, but the momentum did not last long, as you will see. As soon as price tested the trend line, we saw how price came back into that key level. And since the beginning of the week, price had continued to oscillate around that area. So for me, it's an evidence that the market knows that the 156.00 area is a crucial juncture, where this is where the pace is going to be set for the week. If price trades above it, we continue to see buy pressure above it. It could signal the uptrend move and breaking out of that descending trend line. And if price maintains momentum below that level, then this could incite a breakdown of that ascending trend line. And of course, this will be the first time price will be breaking down that trend line in the last 7 to 8 weeks. So you can see how crucial this juncture is. So what we are going to be doing now is to scale down into our execution time frame, that is the 1 hour time frame, to actually see how market participants have behaved around the 156.00 area. Do we have a structure to guide our decisions for today? Now to do this, we'll scale down into the 1 hour time frame, and if you do that correctly, you will see that we have a new structure around this area. In fact, we have a range bound structure where the 156.585 is an established resistant line for the week, and look at how beautifully that area was rejected sharply, pushing price to the downside to establish a support line for the week at the 155.715. So interestingly, we have a range bound structure to work with. Now, with a range bound structure in play, you know how we do it. We want to exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, for the fact that price is trading back above my key level at the 156.00 area, I would love to initiate a buy at this point in time. Now, the reason is simple. You know how we use our key level. As long as price remains above that key level, we maintain a bullish bias. And secondly, the overall long-term trend here remains bullish, and price still remains above that major ascending trend line we spotted on the 4 hours time frame. So buying here is looking a little bit reasonable at this point, so I would like to place a buy right away, and having my stop loss right below the key level, at the 156 point. So I'll just put at 155.800. So let's place our stop loss there at 155.800 area. So I'm hopeful that this will continue, and if it does, a breakout of the resistance line will further establish this momentum, and I will be looking out for more opportunities to buy at the breakout of this structure. So in as much as I'm looking forward to a strength in the Japanese yen this week, let's maintain a buy at this point, since the Bank of Japan's interest rate decision is going to be coming later in the week. That's on Friday. Maybe the favoritism around the yen will be coming later in the week. But pending that time, the fact still remains, price remains above our key level. Price remains above our ascending trend line. The bullish momentum still looking very intact, and you can see how since the beginning of the week, price is making tremendous attempts to break out of this descending trend line. So if it does, this will be very good opportunity to maintain our bullish bias. So that is how I'm going to be looking at the market today. So I already have a buy position triggered. Now, for me to consider selling the USDJPY, considering the positivity around the Japanese economy, the inflation in the economy right now, and of course the wage growth and a very positive labor sector, the only condition that will make me sell is for price to break down that ascending trend line we spotted on the 4 hours time frame. And interesting enough, it lines up with that support line of the range bound structure at the 155.715. So I will not be selling right away if price breaks down these two structures. Instead, I would like to exercise patience and wait for confirmations, which will come in the form of price coming back to retest the structure. And then at this point, I want to consider selling. So I want to see signs that buyers are finding it difficult to maintain momentum above the 155.715 after the breakdown had already happened. Then if I can see this, then I'm rest assured that selling is looking positive at that point. So that is what I'm looking at today. It's a simple trading setup we are looking at right now. We have a buy position triggered. We maintain a bullish bias, and a further breakout of the 156.585 will welcome more buying opportunities. And remember, we are not considering selling unless the 155.715 is broken and retested. So that is my simple view on the USD JPY today. So let's see how this will play out. I hope that we will be able to recoup the losses we incurred during last week, especially on the GBP USD for this week. So I want to wish us all the best of luck on this one. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. And do not forget to give that video a thumbs up. Let's make the like tally with the number of people on board, and thank you very much as you do so. I see you, Jonah Aruna. Good morning to you. Happy to have you around with us. All right, so in the absence of no questions, I want to take that as a confirmation that we are all on the same page. Please mark out those levels accordingly, as we're definitely going to be using them to guide our independent trading decisions. So with that said, let's move right into the final assets on our watch list for today. Stay tuned. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And of course, I shared my view as to regards to how I'm preparing for this week on the XAUUSD on all my social media platform. I hope you saw it. I will not be going into the higher time frame on the XAUUSD because I already done it. So if you missed out on it, you can look out for my XAUUSD market analysis for this week right on my YouTube channel, my TradingView platform, and of course on my Telegram platform. So after looking at the structures on the higher time frame, we have something interesting to look forward to. Remember, I was talking about bullish potential surrounding the XAUUSD in my video, and I did identify a temporary demand zone around that 2,700 and 2,690, which is our key level for this week. And looking at the market drivers influencing the sentiment in the market, the path of least resistance for gold is looking a little bit to the upside. Last week, we saw the economic data from the United States, the US PPI, that is the producer price index, and the CPI data suggested that inflation in the US is slowing down. And this is likely going to increase the appeal for gold as a hedge against potential future rate cuts. And of course, the fact that inflation is thinning out has increased market bets on the Federal Reserve rate cut for this year, and this definitely will continue to support the ascent of gold prices. Then another selling point for gold is the fact that the US dollar is doing a retracement at this point where it's experiencing some fresh selling pressure. We saw that happen on Friday following that US economic data, and this could continue to support safe haven assets like gold. Now, we also had comment from Federal Reserve Governor, that was Christopher Wallace's speech, where he indicated that further inflation easing bolsters expectations of faster rate cuts. So for me, the path of least resistance for gold is looking to the upside, and let alone the geopolitical tensions which is still there, though we have some easing fears around that right now, where the Hamas released some hostages to Israel yesterday, and of course concerns about disruptive trade tariffs and hope of US President-elect Donald Trump's potential relaxing curbs on Russia had to safe haven demand for gold at this point. Now, with that being said here, it doesn't necessarily mean that the US dollar does not have something to bank on to as well. We have inflation risk from Trump's potential policies. And of course, there is improved risk tone in the market at the moment. And market too is also looking very cautious ahead of Trump's speech today. So definitely it could bring in some level of indecisiveness in this particular market. So trading the gold today, we need to take a lot of things into play. Now, Trump's inaugural speech is very, very important to look at. Are we also going to be considering buying gold only at dips, that is at support area on the structures we will be identifying today? So that's the only, we will look out for support areas to buy gold today. Then we're also going to be taking some caution ahead of Trump's inaugural speech. So that means that if we at any point in time have some profit running in our position, we want to move our stop losses to secure this position because of a potential volatility as a result to Trump's speech or remark today. So we need to keep this in mind. Now, looking at the chart from a technical standpoint, you will see that the market started the new week around that 2,690 level, which we identified in my recent video on gold, using it as a strong support line. And in fact, the week has started on a positive note. So we saw this whole move happen. We saw a little bit of resistant line here before it finally broke out of that structure. And from a theoretical standpoint, price coming back to retest the structure will be a beautiful opportunity to join an uptrend move. And like I did mention in my review of the gold market dynamic, we only want to be buying at support areas. Now, this resistance line we've seen here, since price has broken out of the resistance line, it could serve as a support line if price comes back to retest it. Now, the last 2 to 3 hours has seen something like that happen. As you will see, we have been noticing some buy pressure around this area. So this whole area between the 2704 and the 2700 area could be a valid support line to work with. So if you're buying around this area, we want to be having our stop losses way below, maybe below the 2696, about 90 pips stop loss. Remember, this is the gold market we are talking about, and since we are looking at swing trade positions, let's ensure that we give enough breathing space for price action to move around. So in that regard, I already have a buy position triggered already. Now there is a caveat to this bullish momentum here. Now if you look at the structure here, though price hits a 1 month high at the 2725 on Thursday, ever since that happened, you can see price had consistently found lower highs, giving us a descending trend line right here to work with. And look at what happened at the beginning of this week. As soon as price got there, we saw price come back down, making it further emphasizing how sellers are strong around this area. Now with a retest of this structure here, I would like to see price further break out of this. If it does happen, I would like to add more buy position at the break of the 2712. In fact, I would like to acknowledge that level right now so that we can place a buy stop order above that structure. I think I will do that right away. If price can break above this level, I will definitely be adding another buy around that area. So let's label it. We have 2712. I will also place a buy stop order above that structure. So let's do that right away so that I don't forget. So here we are. So I just did that right away. So place another buy stop order above the 2712. If price breaks out, then we're looking to add more position. Then if price goes ahead to break out of the 2725, we definitely want to be adding more buy positions to our existing trade. Now, in as much as we're looking out for bullish potential, remember this descending trend line could become a barrier for buyers, and this could incite some selling pressure. It could be some short-term trading opportunities ahead of Donald Trump's speech, where those who had capitalized on this uptrend move from last week may want to be taking some profit by leaving the market ahead of Donald Trump's inauguration. And if that is going to be the case, we could see price respect this descending trend line and drop back into the support line of that ascending channel we identified on the 4 hours time frame. So for me, considering selling here will only happen if this support line of the ascending channel at the 2690 is broken to the downside, and then I want to see signs that buyers are finding it difficult to climb or maintain momentum above the support line. Then this will reflect on the chart as continued selling pressure on my lower time frame to inside selling ideas. So this is the only condition that will make me sell. Remember, we are looking at swing trading positions. So but if you are a scalper, day trader, of course we are going to be scalping this market today in the go challenge. For those who are part of it, I'm going to see you in about an hour and a half from now. We could see some short-term selling ideas within this old range bound structure, which is about 150 pips. If buyers find it difficult to break out of this trend line. So if that happens, we could see something like selling pressure below the 2,704, and this could incite selling ideas into the 2,690. Now, please note, this is not a long-term thing. I'm not taking this on my swing account. I'm not taking this push on my swing account. I will only scalp it. If you are not a counter trend trader, you're not comfortable taking counter trend opportunities, I advise you to stay clear of this market. But if you're a scalper, day trader, you feel comfortable, we could be looking at about 150 pips around this particular area. So let's see how the market will play out. So like I said earlier, I already have a buy position, which is currently running in a loss of about 12 pips thereabouts. So let's see how this is going to play out going forward. But trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So this is my simple view on the gold commodity ahead of today's trading session. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section, and do not forget to give the video a thumbs up. And for those of you who had clicked on the like button, thank you very much for your support and encouragement. I really do appreciate it. So let's see if there are any questions or clarifications. All right, all right. I just saw your comment, Wokocha Kingdom. It says your sell stop on US oil was placed on 76.224. I don't have a sell stop on US oil spot. We never talked about executing a direct. Okay, yes, we did. Okay, that's true. Oh, exactly. That's true. You're absolutely correct there. Let's see. It's right. Yes, 76.224. Yes, that's where it is. That's where it is. Exactly. I hope I answered your question. All right. So, in the absence of no further questions, I want to assume that we are all on the same page at this point. And it's on this note, we call it a day here on the Forex Morning Mastery, our first edition for the week. I hope you had a good time. And I hope whatever we discussed here today has been of immense help in making your independent trading decisions. We took on 3 financial instruments for this week: the USOILSPOT, the USDJPY, and of course my favorite, the XAUUSD. And thank goodness we were able to identify simple trading setups that we are going to be using to navigate these markets today. So I hope you mark these levels out on your charts. Very, very important, as you are going to be using them to navigate this current market dynamics. And if you have done so, well done, kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. For those who joined us for the first time today, I do hope you are able to gain a couple of things from what we have discussed here. And in fact, the more time you spend with us, the better you get to understand my analytical approach. And I look forward to seeing you guys same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done and of course prepare ourselves for the second half of the week. So I want to wish you all the best of luck at this point. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.